Welcome back to Factful Finance, where we break down complex financial concepts so you can make smarter, more confident decisions. Today, we're diving into an incredibly important topic: understanding your financial landscape as a freelancer. But before we get into the details, here's a thought for you. Did you know that 53 million Americans are freelancers? That's right. Over a third of the U.S. workforce now chooses freelancing as their primary way of earning income. So whether you're already freelancing or just considering it, understanding how to manage your finances as a freelancer is absolutely crucial. Quick disclaimer: this video is for educational purposes only. While I'll provide insights and examples to help guide you, always consult a financial professional for personalized advice tailored to your unique situation. Now let's break this down. Freelancing offers incredible freedom, but it also brings with it unique financial challenges. Unlike a traditional job, you're not getting a regular paycheck, benefits, or employer-provided tax deductions. So what do you need to do to set yourself up for financial success in the world of freelancing? Step 1. Know your income fluctuations. One of the first things to understand as a freelancer is that your income will likely fluctuate month to month. This can be unsettling if you're used to a steady paycheck, but it's also where freelancing can give you a significant advantage. For example, let's look at Benjamin, a freelance graphic designer. In January, he earned $5,000, but in February, his workload dipped, and he only brought in $3,000. If Benjamin isn't planning ahead for that dip, he might struggle to pay his bills in the lean months. Key insight: track your income for at least 6 months to understand your financial patterns. This will give you a more realistic picture of your cash flow and help you plan better. Step 2. Set up an emergency fund. Freelancers don't have the luxury of paid sick days or an emergency fund built by an employer. That's why building your own financial cushion is non-negotiable. Consider Olivia, a freelance writer. She set a goal of saving 3 to 6 months' worth of living expenses. She started by putting away 10% of every paycheck, and after a year, she had enough to cover unexpected costs like medical bills or a slow month of business. Actionable tip: start small, but make it a habit. You could use a savings app like Capital to automatically set aside small amounts of money every week. Even $50 a month can add up over time. Step 3. Tax time, your new reality. As a freelancer, taxes are one of the biggest changes you'll face. Unlike traditional employees, your client doesn't withhold taxes from your paychecks. This means it's up to you to set aside money throughout the year and make quarterly tax payments to avoid a big tax bill at the end of the year. Let's look at Noah, a web developer who earns $80,000 a year. He needs to save at least 25 to 30% of his income for taxes. By setting up a separate tax savings account, he was able to avoid the stress of scrambling for cash in April. Pro tip: use tools like QuickBooks Self-Employed or FreshBooks to track your expenses and income. These platforms can help estimate what you owe in taxes and send reminders for quarterly payments. Step 4. Managing health insurance and retirement. In a traditional job, health insurance and retirement contributions are often taken care of for you. As a freelancer, you're responsible for both. For instance, James, a freelance photographer, uses a health insurance plan through healthcare.gov and contributes to an IRA for retirement. By setting aside just $500 a month for retirement, he's steadily building his nest egg without the stress of waiting until the last minute. Tip: consider setting up a solo 401k or SEP IRA to contribute more than you would in a traditional IRA, giving you the chance to save more in a tax-advantaged way. Step 5. Budgeting, the key to stability. If you want to truly thrive as a freelancer, you need a solid budget. Freelancers often face a feast or famine cycle, and a well-planned budget can help smooth out the highs and lows. For example, Mia, a freelance marketer, uses the 50-30-20 rule. 50% of her income goes toward needs, rent, utilities, 30% for wants, eating out, hobbies, and 20% to savings. This strategy keeps her financially grounded even during months when business is slower. Actionable advice: use budgeting tools like YNAB, You Need a Budget, or Mint to create a personalized budget that tracks both your income and your expenses. Conclusion: Understanding your financial landscape as a freelancer is all about preparation. You need to anticipate fluctuations in income, plan for taxes, save for emergencies, and set up retirement and health insurance. It may seem overwhelming at first, but with the right tools and strategies in place, you can take control of your financial future. So, what's the first step you'll take toward mastering your finances as a freelancer? Let us know in the comments. Thank you for joining us today on Factful Finance. If you found this video helpful, why not like, subscribe, and hit the bell so you don't miss out on future content that can help you build financial stability. We think you'll find the next video on your screen particularly helpful as you continue on your financial journey. See you in the next one.